So how's things been so far? All right, so everything is fine for you, but psychology is still in. So I need to work on my entries. All right. All right, say good. My emotions coming. Currently. Oh wow. So that's something about emotions. Emotions, honestly, today as well, I didn't call out no trades because I just woke up. My emotions were just over the place. Like I was not feeling good. I didn't take no trades. I didn't call because I traded last night. I took one trade out of like, okay, let me just trade type of stuff because the move was just clear. I took UCAT sell and it's a good thing I got out before even reversed on me. But yeah, when you're not feeling good in trading, don't force it. Like don't force. I understand that yes, um you do have a time frame, right, to get to probably those 30 days to trade. But the moment you start trading when you're not feeling like it and you start losing money, you're creating a more shorter time frame for yourself to make back that money. You feel me? So moments like that, you wait till your psychology is best, and then you go in and trade. Like taking a break is very, very important as traders. Knowing when to take a break is very, very important. Trust me. And for psychology, what factor of psychology is disturbing you? Is it like you have an issue holding the move, or you have an issue with um accepting losses? What's the part of psychology disturbing you right now? There's like different factors, you can psychology is pretty much vague. It's like a lot of things, so you have to narrow it down to the things. Holding moves is part of it. All right, so holding moves is part of it. So one thing about holding moves is knowing when to leave a move. Do you know when to leave a move? Like if you get in a trade now, do you know when to leave that trade? All right. So if you know when to leave a trade, holding a move shouldn't be an issue because you know that okay, when you're in a trade, and if that trade is supposed to show you any signs for you to leave that trade, leaving that trade should be easy for you, honestly. It shouldn't be like too much of an issue because you're trading, you're not supposed to be trading off emotions, you're supposed to be trading off facts, you're supposed to be trading off what you're seeing in the market. Let me tell you something about you see even the big traders that trade in Wall Street, those people don't have the best of entries. In 100% of trades that those people could take, only 30 to 25% of those trades will be perfect entries, will be entries that they won't have drawdowns. You need to understand that majority of the time, your main issue is that you just want to be right about the direction of the market, not about the entries. Because you could have an entry, and at that moment, it plays around the entry before going. Let me tell you something on this trade, right? You see this trade right here that I caught. This trade, I use this trade to pass the phase one challenge with just this trade. I got into this trade at these which are the candlesticks? Let me see the time. It was the morning. I think I got in at this candlestick. Was this candlestick? I believe so. Or maybe it was this one. Maybe it was even this candlestick. I was in drawdown for so long. Even it went, I was in all drawdown, and then finally this big breakout move happened at night. So I already knew that, okay, I knew what I wanted to see for this trade. I already knew my factors. I had my lower lows and lower highs that the market was already creating. And I was expecting the next lower low. So after the market gave me a nice impulsive bearish candlestick, I was like, all right, I'm gonna get into it when a candlestick closes below this trend line. And I'm sure I got in at this candlestick right here, and the market started playing around. And I just drew what happened. I had to start looking for reasons for me to hold the trade and reasons for me to get out of the trade. The reason for me to hold that trade was that the market started consolidating. It started consolidating even after breaking that trend line, but it was consolidating underneath that trend line. The moment the market would have closed above this blue line, I would have gotten out of that sell and taken a buy instead. There are times when you hold a trade, the market will play around before giving you that money. Your entries will not be the best. The market will play around before giving you that money. Let's just say, for example, again, if you're a type of trader that you caught this trade for a factor that you got into this trade for a sell, maybe because you were like, oh, this candlestick is it's about to engulf, this candlestick is a reaction around this zone, and you put your stop loss above this zone. You realize that, okay, the market came back again one more time before going down. I caught this trade, but I didn't catch it from here. I caught it from here, from this. I had no drawdown in this trade, honestly. This was a trade I had with a 3 pip stop loss. This was a 3 pip stop loss trade. And I used that trade again to pass the phase 2 of the challenge. Only AU. This was the phase 1, passing the challenge. This was the phase 2, passing the challenge. Caught this one yesterday, profits in the live account. So I'm just making money only off AU on that account, literally. Not even off my goal, but just off AU. I'm waiting for the best of moves, literally, and I'm just like waiting for the momentum and understanding that, yeah, certain factors at certain times, your engines will not be the best, but that's why you have to know that if price breaks at a certain level, I'm going to do this instead. Like for me, when I got into this sell, I'm like, if price, my buy level is here, my sell level is below here. That's just it. And when price came back to this zone and reacted off here, literally I had the perfect exit as well. Like I exited at this candlestick when price failed to break below here. And it was around what time? It was around 1 at night. I'm like, okay, this is probably this pre-London. London's gonna open up and London is gonna do like a whole pre-London pullback. Then New York will start selling again because I've studied the pair. So having confidence is about practicing. You have to practice and understand something, how it actually moves around. That's how you only have confidence. You have fear when you don't know what you're doing. Fear exists in the market when you don't know what you're doing. But fear is very good because it helps you to know that, okay, you want to preserve, you don't want to lose. I'm not saying that don't be scared to lose, but don't let the fear of losing control you from holding your moves. And something about me personally, the way I deal with challenges is on the first trade, I risk 2% because of how good I trade. It's not, I don't say you to do it if you really don't have a high win rate. I have a high win rate. My first trade is 2%. If I make a 1:3, that's 6% I've already made on that challenge. But with this trade, I made a 1:1 I don't even remember, 1:8 or something because it was a 3 pip stop loss. And how many pips did I catch? No, that's not the one. It's this one. So 3 pip stop loss went to like 20 something pips. So that was like a 1:7. Yeah, 1:20. No, 1:9. So you see how like you need to have that confidence in yourself. That's why you need to practice because no matter how much I teach you guys how to trade, you need to go on the chart and practice yourself so you can develop your own experience. You can know that, okay, it's like a sport. If I do this all the time and I see this player is making this about this type of motion, or when I'm at the wing, I know I have to do certain type of motion, or eliminate a player just by doing that type of stuff. You've seen it so many times, you just know how to do it already. It's like playing video games. It's like playing video games. You really know that, okay, in this level of this game, or the players of this game cannot see from this angle. So you're always doing this particular thing to them. Like, you know what I'm saying? Like, it's like a cheat code. You're mastering it over and over. Like, you cannot repeat class 1 for 7 years and you don't know almost everything in the book. You feel me? Because all of these things is repetition. All of this is repetition. There are moments where you have what they call your A1 setups, your A2 setups, your A3 setup. That is like your best setups where you always win a trade from. Like me, all of this movement right here is my A1 setup right here. All this movement right here that it did on AU, this is my A1 setup right there. I like to see that setup for AU. When I see it for AU, I go crazy on it. The same thing with you. Start knowing what is your A1 setup. We are trading the same things over and over. We're not trying to look for new things every in the market. You're looking for what you already know in the market. That's what you come on the chart every day. If you don't see what you know in the market, that day you decide to study what happened in the market. Don't put your money on the line. Your capital is very, very much important because you're not trying luck. You're doing what you already know. The moment you start taking your little drawdown they give you on the challenges and you're trying luck on this trade, that's where you start failing. As traders, we are out here to make money. It's not about if the market wants to buy or sell. We want to make money. But we want to make money, we want to get into the right trades. When they get into the right trades. So don't hurry the trades up. Let them build themselves. Let's see, got 40 days to pass the phase one. On a 9% drawdown, at that point, you will start have to using probably like a 0.2%. And if your win rate starts increasing from there, then you start, it's a 12% overall. So you still have 3%. You still have 3%. So you really have to like, personally, me, I would still keep it a buck. I'm gonna use 1% on the next trade, but I'm gonna just wait for the next trade to be a very good trade. To be a very good trade. Because I personally as well, I had a challenge one time where it was left like 2% and I brought it back up. I brought it back up to break even. Then I just waited for the amount of days to go by. Then I had a whole reset. Then I passed the challenge. So you could wait. You could still do 1% or 0.5. Just back test and gain more confidence probably for the next 1 week. Then you go back to trading the account. Take a break, back test, go for a whole week, trade, just demo trade. Then you go back to the account and you start trading with a 0.5% of the account. Take like your first 2 trades with a 0.5%, and then you increase it back to 1% if you win those two 0.5%, increase it back to 1%. But when you're trading, treat every trade the same. That is how you look at a trade. Don't just take a trade because like, oh, I'm already in profit by $5,000. Let me just take this trade for no reason. It happens to the best of us. We've had many winning trades. We've had many winning trades. So you just start taking stupid trades because you're already in a winning trade. You're like, oh, this trade looks good, but it doesn't meet up with all your criteria for trading. All your criteria for why you want to take that trade. You just like, all right, let me just get into the trade. And then you realize yourself, you lost the trade. You're like, okay, but you could be fine because you're already in profit, but that's a bad mentality. To keep on making money is to treat every single trade the same with the same criteria. You're careful because me personally, if I didn't do that, I wouldn't be having 20 win streaks, 22 win streaks, 66 win streaks, all of those streaks. It's because I treat every trade the same. If I come in the chart, I look, I don't see what I want, I don't trade. I don't trade. I don't force it. I let it be. I let it be. You need to understand, you let these things build themselves, like you let the market mix itself. Like this trade idea that I called the other day. I just said it's the breakout, wait for the retest, the retest happened, we got in. Simple. We're not just gonna get in the trade after a whole breakout like this. It doesn't make no sense because why? There's a whole area around here that price came before and price rejected off it for a buy. Price could still have rejected off it for a buy. So it will just keep buying, but we have to wait for it to create a lower high for us to enter for the sell. All of these things are necessary for you to wait, always necessary. Yeah, this is capitalism right here. This is capitalism. The time you're making money in the market, they're taking it from somebody that's impatient and giving it to you. The money is always fluctuating from somebody to another person. What websites are best for funding accounts is personally on your preference. You could use You could just go. There is True Forex funds. I use that. It's pretty good. The thing is, the thing with them, they have high commissions, but they have low spreads. My Forex fund is good, but they have low commissions with high spreads. How they call these people? Funding Kingdom is good as well. They have nice challenges. They like their Royal Challenge is pretty good. I personally, I don't do FCMO no more. Royal Challenge is good because I think they have like a 12% daily drawdown as well. I mean 12% overall drawdown. So I got $16 on a live account. I want to flip it. Any advice? Things like that, bro. You have to be very knowledgeable. You need to be a good trader. You need to be a good trader. Like that's how I'll tell you. You need to know how to trade. You need to understand adding entries. I never try to discourage people not to be able to, our websites are best for the fun. Um, because $16 is very high. What do you want to flip it to? You can flip it. You want to go full margin on the whole move. You could, but it's very risky, honestly. The safest way to be a profitable trader is dealing with percentage returns. That's the calmest way for you with your emotions to make money. Like that's how people get funded. So if you're having a 100K account, it's easy for you to make $10,000. It's easy for you to make $20,000 if you have a 200K account, rather than having a $16 account like the way you do, and you trying to flip it to probably $200 or something. It is possible. I don't discourage people because I personally I have flipped, I think it was 900 something dollars to 123K. People do it. I've done it, but I was knowledgeable. You feel me? So it's about being, if you're an intelligent trader, you can do it, bro. But if not, I'll just say, just try trading that thing little by little, making even it's $2. If you make $2 off the account, that's a lot of money. That's a high percentage return. Like when you want to deal with this trading stuff, look at the percentage returns based off your account. Don't look at the money, because if you look at the money, it's gonna discourage you. When you go online, you start seeing those people that are making 100K a day. Then you look at your account, you try to rush yourself to make 100K or make $10,000 when you don't even have the capital to. Those people that are making 100K, they have like a million or 600,000 in their account. They were risking probably like $30,000 on that one trade. That's how much they were risking. Those people did not put $1,000 and make 100K that day. No. So if you put $1 and you make $3 that day on that $19 account, I mean that $16 account, that's a lot of money. That's a lot of percentage return that you've done on that account. There's a lot of percentage return. So if the way to be satisfied with yourself is by looking at it percentage wise rather than just money wise. Because money wise will definitely mess you up. Like for me, I can't, at this moment in my life, I can't even trade a small account no more, because I can literally just be like, it's just 1,000. Then it goes to an L, because I'm not considering no more I'm not considering no more on percentage. I'm looking like, oh, the money wise. That's how it used to be with me before. But now if I look at it percentage wise, I'm happy about it. I'm like, all right, even it's 10K account, you trade it, I make $20. I'm like, yeah, it's $20. That's a lot of percentage for that 10K account. That's a lot of percentage right there. So $16, that's gonna be something, bro. Try inputting in 100 so you can be making $10 from it every week. But 16 is gonna take you some time to grow. It takes money to make money. Exactly. You gotta focus on growing that account rather than flipping it. The market will literally give you those moves where you'll be able to make a lot of percentage in one day. I don't come on this market and I'm looking for like, oh, let me get a 1:10 today, let me get it now. If I see the opportunity, I'll definitely make that money. But if it's not there, I don't force it. I don't force it. I had that account that came out from like 900 to 1 or something K. That was like a whole how many thousand percentage return in 4 months. I wasn't expecting it to happen like that, but it was just how I was trading. It's just how the market was giving opportunities, just how on form that I was. Now this is people are on form, some people have form. That day I was on form. Like I was that moment, I was understanding every single thing happening. Like I was killing it. I wasn't scared to add entries. I was knew how to scale my entries, all those type of things. It happens. So because my psychology was there, bro. I just tell people, do you understand your stuff? But focus on, like Gary Randall said in the comment, focus on sustainability and long-term growth. That's the best way for us traders to, like, keep that account. When you start trying to flip things, have like a small, yeah, that kind of small account, you can practice on flipping it. You can practice on flipping it, but if that kind of account, small account means a lot to you, then don't worry about trying to flip it. Because sometimes you see people who just put $1,000 in an account and they try to flip it to 10,000. They're just working on their flipping skills. It's like a game now to them. They have worked so hard on knowing how to um trade percentage wise, where now they just start trying to flip things. They're like, okay, I'm gonna put $2,000 this week. Let me see, I can turn to $12,000 by the end of the week. That's like, it doesn't mean nothing to them. It's like, I'm just gonna do that. Matter of fact, I need to even start doing that. Just put there and just try to flip it like that in 1 week. But anyways, y'all take your time, focus on the skills first. The money is always here. Don't be the trader that you focus on making money, then you lose all the money. At the end of the day, you don't have, when you know how to trade, you don't have money to keep going, or you're struggling to look for capital to keep going. It definitely sucks. Um, so what did I miss? I wanted to teach today. I forgot. I was gonna go over price action again, and then risk management. Price action again, and then risk management. Give me a second, real quick. I'll be right back. Yeah, I'm on mute, guys. So just give me a second, please. All right. So yeah, candlestick patterns. We already studied the different candlestick patterns, right? So it's not really no need for me to go over that. I have given a book for that for you guys to read, the candlestick Bible. And what I want to do, I'll go over with you guys some top-down analysis and then candlestick patterns as well, using them and seeing how they look on different time frames. So this is AU on this side, and we're gonna do with AU again. So this is AU 4-hour and AU 1-hour. So sometimes when you're looking at the charts, right, you can see that this movement right here is this movement right here. On the forward time frame, you can see how choppy it is, how, like, it's just all noise. But when you come on the 1-hour time frame, it makes a lot of sense. There are times where you will be on the forward time frame, it makes more sense than it is on the 1-hour time frame. That's why you need to understand that you need to really be able to play around the time frames. Time frame correlation is a very important part of trading that some people don't really understand, and you need to understand. Like, we could see that all this movement right here, this was a little consolidation, but this was a decent consolidation. Like, the movement in within this consolidation was pretty clean. And this was the whole movement here on the forward time frame that we could see that was a consolidation area. And that was the break and retest of the consolidation on the 4-hour time frame. And then it pushed down. So all of this movement right here, all this movement right here was a big 4-hour change of, like you can see, a big 4-hour change of structure. So this is where we will look at how we'll go over the charts. We'll see the candlestick patterns that work and the candlestick patterns that failed, and I'll explain to you guys why those candlestick patterns failed. All of these things are things that I can see before it happens. So if I'm going over it with you guys right now, it's just, you guys can also see it as well. Like saying reading the chart when it already passed, it's easy to do. Reading the chart before it happens, that's what is difficult to do. So right here, first of all, we can see, I want to show you guys this. You can see this very nice bullish engulfing candle, but this was a failed bullish engulfing candle. Regardless of this bullish engulfing candle sitting on this level of support, which was right here, on this level of support, on our last video, I emphasized that I don't like using things like bullish and bearish engulfing candles against the trend, only with the trend. This was against the trend. The moment structure did this and gave us lower lows and lower highs. This was lower low, lower high. This candlestick, any bullish engulfing candlestick that I personally see, is invalid. It's invalid. I don't even look at it. The only moment where I start looking at things like this is when it creates new structure. Bullish engulfings are just like where they really trap price action traders that they don't know what they're doing. Goes the same with any pattern. The best time to use any pattern is with the flow of the trend. Any pattern. If you're in the uptrend, higher highs and higher lows, you're all interested in the price action that happens in these moments of price, the bearish price actions. I mean, the bullish price actions that happens in this moment of price, the bullish price actions. That's what you're interested in. In this part of price where it's at the higher highs, then any bearish price action that happens here, the other moment when you're interested in this type of patterns is when it's something like a double top or like a head and shoulders that is formed at that pattern, at that level of price. Or price really bought up really high, and then it has to, at least you see that, okay, there's a level of imbalance. Remember what an imbalance is. All right, you can go ahead and tell me what an imbalance is. Do you want me to unmute you first, or you can type that in? Because every scenario for using certain things will definitely vary. They won't be the same. Like, trading is knowing, is understanding that, okay, when I see this and this, I should do this instead of doing that. But in this case that I'm explaining to you, why you could probably be That's beautiful. Very nicely explained. So let's say moments where you have like a tweezer top, right here, or you have probably like say an evening star, right? I'm just gonna write it anyway. I want to write it like I'm not really gonna care about the spelling, honestly. Evening star, those type of thing, or you have like a bearish engulfing. You have a bearish engulfing, right? When you have these things here at your higher low, I mean at your higher high, those are signs for you to sell. But the moment that you want to take a sell, being going against the trend, is that this market bought up by a good amount of pips. It should have buy by a good amount of pips before you're taking that trade. Don't get in a buy when the market probably bought like, I mean, don't get in a sell when the market probably bought like this type of short distance, like from year to year. Because at the end of the day, your major move is the buys, while your minor move is the sell. If you want to be such a trader that you will call it the ping-ponging, you ping-pong, you know, they play ping-pong back and forth. You want to ping-pong the market. You could ping-pong the market by selling, but not forgetting that your main move is for you to buy. So you have your fib out from the lowest point to the highest point. Does everybody know how to use their fib? I hope everybody knows how to use their fib, because this is a very, very important factor of price action trading as well. So now you're literally waiting for price to react on any of these fib levels. Any of these fib levels are called PRZs, price reversal areas. I can't tell you that any price reversal area is the best, but I can tell you that most of the times, price always like to give a 50 to 61% discount. But in some cases, price will give a 23 to 38% discount. It varies. Trading will vary. Trading is a possibility. Don't ask me where will the market go today. Now, I have to look at the chart and I see what is happening. And then I will say, if this and this happens, I will sell. And if this and this happens, I will buy. I can't tell you that the market will just go like this. Now, you feel me? I don't have a magic mirror. We wait and we'll see as price approaches any of these fib levels, 1, 23, 38, 50, 61, 78. That is when I will go ahead and take a buy from, depending on what buy price action price gives to me around these areas. Because why? I'm overall on a bullish trend. So yeah, the price action that matters will be my tweezer bottoms, my morning stars, my bullish engulfings will matter. So when you're going with the flow of the trend, price action is more favorable. And depending on what time of the day you're trading also matters a lot. If I'm trading AUD/USD and I'm trading within Asian session, I'm for sure for a fact that this price action I'm seeing, price will respect it. But if I'm trading this pair during the dead cap period, which is after 12 p.m. EST, that is considered a dead cap period, there's a good possibility that price will not respect the price action. It'd be like that. How many times have you guys seen like a nice setup, but after 12 p.m. EST, which is basically 5 p.m. your time, and the market doesn't respect it? Like the market just does otherwise. Majority of the time, trading within that period is not the best. That's why people trade within a particular session. You need to understand there's a reason why there are these rules. These rules are for a reason. Don't trade every time. You will see certain setups, don't take it at that time. That setup is trap. It is a trap. And you can't keep falling for such traps. Trading is a constant evaluation of yourself and your mistakes that you're making. The more you evaluate the mistakes that you personally are making, the better trader you become. I didn't become a good trader because that I knew only the right things to do. Nah, I knew the wrong things and avoided the wrong things. So that is gonna be, you wait for bullish price action right there. It could be the whole any of those patterns I've told you. It could be you go on the lower time frame and you could see a change of structure. It could be a whole rejection candlestick, a whole pin bar rejection. Anything bullish, then you're getting for the trade. For your stop losses, I already told you guys how to put your stop losses when it varies, when it comes to the engulfings or when it comes to the twos tops or bottoms, is how big they are. If the things are really long, per se, the candlestick bodies are really long, I do 61% of the candlestick body. I don't do all the way underneath the candlestick body. I do 61%. So when you're trading within those type of sessions, they have a higher probability of price pushing with a good momentum compared to when you're trading out of the session. It's like how can I say? Like Cameroon, if people come online at night because you know that the internet will be fast because when people are sleeping or whatever, you know what I'm saying? It's like this type of things, you know that that's the best time to browse or download an app or download whatever. I don't know if it's still the same. That's how it used to be when I was in Cameroon like 5 years ago. But I don't know if it's the same thing today. Um, that is how you look forward for it. And the same thing vice versa for itself. It's the same. Cameroon will never change, bro. People should vote for me as your president. 2040. I'm playing. Price goes on a downtrend, you're doing the same thing. It's the same knowledge. It's the same knowledge. Right here, we could see that price, if we want to identify price right here within this range, regardless of this range, we could see identify structure. There was a lower low, lower high, lower low. It came and it broke structure when it broke above this high because why? The candlestick body closed. We're not looking at the wicks, we're looking at the candlestick bodies. And price now gave a higher low, gave it this higher high that was like a failed higher high. So at this point, this is a double top. It gave a double top. It broke structure right here. BOS right there. So now you're expecting a lower low. That's when I got into this trade when I was expecting a lower low because why? In this area, I had a confluence of a level of support, basically supply zone, not support, supply zone, and it goes down just like that. And it pulled back again, and it gave us what? Another lower high because it's lower than this previous high. I'm expecting another lower low, lower high, lower low. So in this case, price is pulling back. And if you draw your FIB, price could retrace from the low to the high. Price came and retraced at 78%. In this case, 78%. Yep. So that was your entry. Your entry was when price gave this price action candlestick right here. It gave this moment of indecision, then this moment of decision, giving us an evening star. You enter, stop loss above, and you're targeting down. That was a simple setup right there. The next setup, price came again, pull back. In this case, if you stayed on the 1 hour time frame, the entry would have been like down here. But if you went on the lower time frame and then you waited for a miniature level of support to have been broken, then you would have made some money. So this is what happened. This one pulled back to 38% of the FIB, and then it started rejecting. At this point, price was rejecting here at 23%, but you see that the bearish price action was not good enough. And what happened? This was a dead cap period. This was a dead cap period. The moment price got into the session of this pair, if you go on lower time frame, let's mark up this real quick. You see how this is? This was an engulfing, the bearish engulfing candle. Your entry after the engulfing candle on this 30 minutes time frame, and then you sold. But if you waited for a whole hour candlestick to close, your entry would have been here at this candlestick. Stop loss 61% of this engulfing candlestick. The market will always give you multiple entries. You just have to have a good eye to see it. You just have to have a good eye to see it. That's all about it. Like this is how price action literally works. First factor when you hop on the chart, first factor when I hop on the chart, these are the questions that I ask myself. Where am I at in structure? What market phase am I in? What is price action telling me? What is the next possible rejection? Because you don't want to get in a trade where you just get in a trade, then you're entering a trade, and the next possible rejection is just right there and it starts buying. Like let's say, okay, in this case, you got in the trade. You're seeing how this trade is right here. It's a nice, it's a pullback, it's a break pullback again, and it broke that level and it's selling. All right, you want to get into this sell. Normally, your initial entry should have been at this area after this bearish engulfing for you to sell. You feel me? That would have been you getting into this trade. This was where you're supposed to have gotten in, and then your stop loss would be above this high, and probably that's it. So the moment you're getting into this trade, you need to remember that in the past, these trades were all in this area. Price respected this area previously, 1, 2, and all the like. So the moment price came to this area, as price is approaching that area, you need to be careful to realize that, okay, if I got into this trade late, I need to understand that where was the best of entries. You need to understand that you were late already in the trade. Yeah, I'm gonna show you the equations. You need to know that you need to understand that, okay, me, I was late. You need to understand where your entry was and where the entry for price action was. This was the best entry. But if you missed it and you got in at this late entry and price approached this level, it doesn't make sense for you to want to keep holding a trade that you know that your entry was late. You feel me? It doesn't make no sense. Like, you knew your entry was late. So why are you holding a trade if a trade is trying to pull back? It's trying to have a pullback, trying to have a retracement, or possibly a reversal. So don't do that. Like, it's coming to the rejection area. Anybody that, okay, that caught this trade from year to year should have at least made a 1:2. You feel me? Should have at least made a 1:2 right here from where they got in from the first entry to the second entry. Understand where you are getting into trades before how long you want to hold a trade. Moment from there, you're looking at the possible next rejection area, and that's what the market is giving to you. It rejected up there, and the moment it claps you, you're angry. You're like, damn, it's as if the market was waiting for me. The market doesn't know you. They don't know you. You're one trader out of millions of traders. You're one trader with little capital out of traders that have billions. So you need to get that mindset out of your head that the market is against you. No, you are against yourself because you're doing wrong things. You can't do wrong things and expect right results. It doesn't work like that. It doesn't work like that. So that moment you did the wrong thing right there, shush, you already know what's going to happen to you. You already knew what's going to happen. Price pulled back just like that. So you need to know your entries. Entries is very, very important. Knowing the time that you got into that trade, it is important. So when you look at that, identify your next possible area of rejection. That is rejection for you to enter. It could be for you to either enter the trade or for you to get out the trade. So in this case, this was for you to get out the trade. With possible rejection area for you to get in the trade would have been like where we were around this area, waiting for rejection here. That's for you to enter a trade. For you to get out a trade will be like this is for exiting the trade, this is for entering the trade. And sometimes you'll be like, okay, this place has had multiple touches, and this now just gave us a new lower high that it hasn't given us a lower high before. So you're expecting a lower low. Simple. That's price getting out of consolidation phase. The next question you ask yourself is, what session am I trading in? The sessions matters a lot. That is why there are different sessions. These sessions are because, do you know why the market has different sessions? Because this is the world market. It's not only in the United States. So when the New York market is open, means the banks here in America are open, means the banks are trading money. If the banks in Asia is open, the banks in Asia are trading money. It's Asian session, so it means they're trading money. They're moving money. So when it's not Asian session, it means the banks are closed. What does that mean? It means bigger hedge funds. It means big market movers in the market. They're not banks, but they're just like manipulating people. That's when they're moving around and taking people's money with false moves. They're manipulative at that moment. So you need to trade within the session. Me personally, I don't trade gold out of gold session. It has to be New York session for me to trade gold. It has to be either Asian session or New York session for me to trade AU. If it's not those two sessions, I'm not trading AU. It's either London or New York session for me to trade GBP. I don't trade GBP pre-London. I don't do that. I do not. No matter the move is moving smoothly, all right. Sometimes following your rules and missing a trade is still a win. It's still a win. That's a win for you for that day. Being disciplined will take you a long way in this market. Because why? Why are you not making money? It's because you're not disciplined enough. You're not disciplined enough. You gotta be disciplined enough to know when to sit on your hands. Looking at everything and being like, okay, I didn't see this and this, but the market is making this move. That's fine. Today, I'll analyze why the market made a move, even though everything was showing just one thing was lacking, but it did what it was supposed to do. And at that moment, you added another confluence scenario into your style of trading. This person is just keep trying to join and his things is not joining and it's distracting me. Like I personally, after a strong move, after a strong push-up move or push-down move, I like to see a whole new switch of structure created before I'm taking a sell. I don't feel comfortable taking a sell at the peak high because that the market has overbought. No, I like seeing the whole creation of new structure. The same thing vice versa when it comes to the buys. I'm into the sells. I want to see it go down, create new structure after a long period of selling for it to buy. That was like on gold today. Just I woke up, I wasn't looking at gold at that time because I like trading gold around 9 a.m. But I had this oh, the person is on this call. Killian, remember yesterday we had a one-on-one session. I told him this on gold. I was like, where is this gold thing? Is this gold? That's GP. Okay, this is gold. Why are these two things mixed? I was like, for this thing, for me to take a buy from here, I only have to see gold create new structure, then I buy. And that was gold did. Gold created new structure. It was so down, that was strong. The only moment that structure will be broken from this trade is when price goes past that level, that 100% level. That's when structure is broken. But gold cannot come and break that structure by just pushing up just like that. Sometimes it will, but on the safest times, no, it will not. So market did what? Market created new structure and then it pushed up. And this was the moment Randall called his trade and caught his trade. And it was a beautiful trade because why? It was basically like a head and shoulders. The market gave lower low, lower high. Then it gave equal lows right here. Lower high again, lower low, higher high, higher low, higher high, consolidation, breakout of consolidation. This was the candle that broke out of the consolidation. Entry, stop loss below here, opening of New York session. Easy trade. I wish I saw that shit. Honestly, I would have made money. Sure. Randall, please send me some money, bro. You made all that money by yourself. So those scenarios is the same thing. Just create principles for yourself and trade those principles. You can't trade everything in this market, but you can trade something in this market. Everything is not something that you can trade. Some days, people that trade smart money concept will have the best of entries. Some days, other trade price action will have the best of entries. Will have the earliest entry. Some of them will have the late entries. So you can't force this thing. You feel me? You cannot force this thing to say like, oh, every day you have this entry. Some days you might see trades every day, other days you might not. But like there must probably be a reason that you would have not seen that trade. Just have to go back on the chart and be like, okay, let me look for this reason. Today, I traded UCAD after a very long time of having a love-hate relationship, and I'm happy that I caught that sell and it was pretty good. And I'm happy that the thing didn't slap me back because I think I gotta stick to a pair and make money off AUD bread most of the time on that pair seat. into my profits. Yeah, sticking to a pair is very, very good. Sticking to a pair is very, very good. Like, you don't want to trade everything. Today, I took this sell from year to year, and the moment price got to this level of support, I just got out of the trade. Because on the lower time frame, when price got there, price gave this double bottom, and I just knew that, okay, I had to just get out. Where is the thing? It was on the 1 minute double bottom. It was this double bottom that made me leave this trade. 1, 2, and I left the trade. And look at that. And my entry, what was my entry? My entry was around doing this noise. It was inside this noise and everything. I think let me look at it on the 1 hour. My entry was right here. Yeah, it was within these consolidation areas. Yeah, I got in, it pulled. You see, it's giving lower lows and lower highs. When it comes to entries, it's the same thing. When you overall see the price action that you want to see on the higher time frame, you just drop on the lower time frame, waiting on the pullbacks. That's all you're doing. In a market that in a downtrend market, you want to get in at the lower high of the market. The moment you see price action at that lower high on an hourly time frame, the only reason why you're coming down on 1 minute, 5 minutes, 15 minutes is because you're looking for the next lower high on that time frame or the next break of a 1 minute support so you can get in and sell. That's how you have zero drawdown trades, or that's how you're barely being drawdowns. Because the market, after doing that lower low, you're expecting a lower high and another lower low. I got in, the market pulled down again, lower low, they pull past this lower high, but I wasn't scared because why? It's the 1 minute. You feel me? It's a 1 minute. 1 hour structure is stronger, but though the 1 minute will happen to complete the 1 hour structure, but you know, I already like had that confidence in myself that it is what it is. I already put the money on the table. Some days it's gonna be choppy. That's how it's gonna be. I went into profit, came out of profit, played around, then went back into profit. It went beautifully down, came back again, I gave a double bottom. And the reason why I got out of this trade was because this double bottom opened up bullish. The next 1 hour candlestick after the 1 hour candlestick that closed opened up bullish. If it had opened up bearish, I would have kept holding my trade. But due to my experience personally, I left that trade. So this was a perfect exit on this trade today. Or else I would have taken it would have been an L, but psychologically, imagine I was up like 2,000, I left 1,700. I left to 1,700. So imagine being up 2,000 and you come back all the way back to entry. Around this areas, I was up like 200, maybe 400 around these levels right here. You know, that was like, okay, that's okay money. But when you start going to deeper profits, that's like a good 1:2, 1:3. It was 1:3 actually because I had a nice stop loss. My stop loss was above this high. So it was pretty decent. So all of those things are how you look for entries. The same thing with when it comes to a buy, you're trying to get in at the higher low. So if you're getting a trade at the higher low, the same thing you go on the 5 minute time frame, 1 minute time frame, you're looking for the next higher low to get into, and then your stop loss is below the previous higher low. That's how entries are, just simple. And everything happens the same throughout every single time frame. It's just on the particular time frame, it just happens faster. Like we could literally look at all this trade. Imagine that, just forget that this is the 1 minute. I think this is the 1 hour. It's the same price action. Is it or is it not? It's the same price action, right? The same freaking price action. Nothing is different from here. It's the same price action that we see. You have here, this is even a supply zone right here. How I draw my supply zones. You have one touch came down, second touch, third touch. This is even a double top. We have reasons to have sold here. Reasons to have sold here would have been we have a tweezer top also going with the bearish engulfing. We have an evening star here. All of them are sell patterns. All of those are sell patterns. All of those are sell patterns. Then in this area, we had a whole area here that you could see that this was an area of support because price came here the first time, rejected off it, came again the second time, rejected off it. And when price came, it broke and retested that support, came back again, retested it the second time, and then it rejected off there, give me another one from entry, which the stop loss could have been above here. I wanted to really stack in another entry here, but like I said, today I wasn't feeling too confident, so that's why I traded with a small lot size. And look at how it pumped down. Gave a double bottom, the same price action. Imagine this was 1 hour, double bottom. It's just, we liked it on the 1 hour because we're more comfortable with how long things take. You know, you're calm, you're like, it's taking some time, you're having more confidence. You're taking probably 3 hours to lose a trade. But maybe when you trade on the 1 minute and you lose a trade within the next 3 minutes, you're mad. You feel me? It's the same thing. Price action is the same throughout every time frame. But trading on the lower time frame, you have to make sure that you are in correlation with the higher time frame. Does that make sense to you guys? Are you guys seeing what I'm saying? Like all the price actions are the same on every single time frame. Whatever pattern you see on 1 hour that makes you want to trade it, if you see it on 1 minute, as long as it's in correlation with the higher time frame, you're trading it. That's how you think I'm having 3 pip stop losses. There are times I trade AU with 2 pip stop losses. I trade gold with 5 pip stop losses, and I catch 100 pips. Tell me how am I not going to flip accounts? That's how it goes. Because when I see those patterns within those sessions, and I have some cheat codes that just for the other students. But when I see those cheat codes, I'm just going crazy on it. I'm just going crazy on it. Just like that. Just like that. I would have taken this buy too, but at the end of the day, it's about being confident. If you're not confident, you cannot hold a move. Practice, practice, practice to give you that confidence to trade. That's why sometimes being a sales or business trader is better because you have confidence in yourself. You have confidence that, okay, when I see this my type of setups, I'm just gonna go crazy on how much I'm putting on this setup. You know, then there are some days where you're like, all right, I'm not going to put too much money on this setup because I'm not too sure. But I know it's gonna work out, but my psychology is not for it. Like look at how all these GU is playing. I want to sell GU so bad, but GU is playing around crazy. GU is about to give us what AU just gave us. GU is about to consolidate, and then we'll break out below this blue line, and then we'll keep selling. That's what GU is about to give us for next week. Remember what I just told you guys right now. Next week, you see this same setup right here, this consolidation and breakout. That's what GU is going to give us. It's going to consolidate and then break out. I shouldn't say that as if I know, but that's what I feel because fundamentally it should sell. The fundamentals that came out for gold for GU today and the other days are supposed to make it to sell, but it has been so choppy on the sell, and I think it's when it breaks, it's like you're trying to get in a sell, like right here. You see how this type of sell you're trying to get into, and you see that in the past it's been rejecting off here. You have to be careful. Like you see, it came here, it failed. It came here again a second time, even after giving this nice type of price action. To be on this, that's why I drew this zone. To be on the sales side, I wanted to see price close below that level for me to enter for a sell, but it didn't close below that level, so I didn't enter for a sell. So that was one of my questions. Where's the next potential rejection area? That was it right there. Did it break the rejection area? No, we did not. But what if you don't draw that rejection area, price action looks clean. Price action looks clean. So you can only see what you chart up. Look at that. Price action looks clean. You feel me? You're like, okay, the market has given lower lows, lower high, lower low, lower high, lower low right here, another equal high, and then you're expecting the lower whole new lower low to break out of that level, right? But you're seeing this is nice price rejection all from the buyers. Price is rejecting the buyers. Price gave a nice solid bullish candlestick. But what's the problem? Price is also rejecting sellers down here. And on the lower time frame, we want to see price go low and close below the lowest point. The lowest point, either this or this. And plus this also, at this time when price gave this price action, it was at 12, the dead cap period of the market, when price action is not respected. You see how that candlestick went and it didn't close. So this is another thing I tell people. closed volume is very different from open volume, especially if it's a determination candlestick, especially if it's a candlestick that will make you want to do something. If that candlestick does not close the way you want it to close, don't enter that trade. Don't be like, oh, it's a bullish engulfing, it's a bearish engulfing, it's a that, let me get in before it goes and leaves me behind. Nah, wait. That's how the market traps people. The market will trap people like that so many times because you're in a rush to get into trades. You're in a whole rush to get into trades. You have to wait, price determination candlestick closes, and then you enter the trade. If it doesn't, no reason for you to get in that trade, my people. So you see, micro supports and resistance are very, very, very important. Like super important. Like, see how what happened from this moment. It bought. Look at that. Just saying that, okay, you got into this trade, you're like, oh, let me get into the trade. Get into the trade, put your stop loss above this candlestick, a couple of pips, and then poop, you just hit your stop loss. As immediately as you enter 1 hour, the next hour you hit your stop loss. You start feeling like, oh, the market is against you. But those are like simple rules that you're failing to respect for yourself. Even that candlestick will take you out. Where price is rejecting off from multiple times, you want to get in a trade, pay attention to see that the lowest point around that area got broken before you enter into that trade. Don't just rush into that trade. Like right here when I took this sell, price was consolidating. I waited till price went down and closed, and what price did I got in. But at the same time, I'm looking at these areas that, okay, price had the whole reaction around here. The moment it starts buying up, I'm out. I'm out. Like this was even, I think it was like 5 minutes or whatever time frame. I saw that move. I saw that bullish engulfing candle and I left the trade. Right here, let me see. I think it was like 30 or something minutes. So this first candlestick, all right, it's really telling me enough. It's really telling me a lot. The moment price just came again close to my entry, I'm like, F this, I'm out of here. Like I'm out of here. Like look at that. The moment, because there are just some certain trades or setups that you know that if it has to go to profit, it has to go to profit. There's no playing around entries no more. Or if it's gonna play around your entry, you rather get out, wait till the thing is done playing, and you get back in. That's how trading works too. There's nothing wrong with doing it like that. You get in a trade, it plays around your entry too much. You have strong confluence, but the price is not respecting the confluence. It has given you probably some amount of profit, maybe like a 1:1, and it's coming back all the way back to entry, and you didn't take no profit of that 1:1. You get out and wait and see if price will give any reason for you to get back into that sell or for you not to change your bias. Simple. Trading works like that as well. How many of you guys trade like that? How many of you guys trade like that? You get in the trade, you see coming back break even, and you leave before you hit your stop loss. Because this type of trades, let me tell you why. Let me tell you why. On my private mentorship, I had a whole call on this trade. This 4-hour time frame had broken structure because why? This candlestick had closed above this previous high. This candlestick had closed above this previous high. But on the 1-hour time frame, it hasn't broken structure yet because why? This candlestick closes below this previous. But at the same time, you're not forgetting that, okay, 4-hour time frame is showing you that type of structure, and you're waiting to see that, okay, maybe potentially the market is ready to go back up because overall you're on an uptrend. All of these sales happening right now is a correctional sell to come and fill this imbalance. So you're looking at the 1 hour, you're like, okay, let me pull out my fee from this low to this high. And then you realize that, okay, the market came literally 50% down for this new, and then they pushed up just like that. That's why I even had that line there, also the 50%. And they pushed up from there. And when they pushed up from there, he bought, I think bought a negative 21 or something. Yeah. So he bought all the way up, weak, came back down, and failed to like break above these highs. Now we just give major equal highs again still. You go on the 4-hour time frame, and price is sitting underneath still our zone, sitting underneath that zone, still telling you that okay, you can keep selling instead of buying. So that's how, as traders, we are looking for facts. We're not trading off feelings. We're not trading off emotions. We're not trading off that Jesus loved me or God loved me, so God will make this trade a winning trade. No. God has already given you the knowledge. God has already shown you the way. It's left to you now to do your part. God will not satisfy one trader and dissatisfy 800 million traders. No. You have to stop trying to get into moves and you're singing gospel songs when it's going against you. It don't work like that. You made a mistake, you take the L. Look at the facts properly, and then you get out of the trade, or you keep holding the trade. So, you gotta be. This is probably one of the longest calls I've had in a minute. But that's how trading is, guys. The more you stick to your facts, the more comfortable you be. Like, even if you enter a trade, you're about to lose that trade. As you got into the trade, you followed your rules, you'll be happy. You're gonna be happy regardless. Like, you having confidence holding that trade, that like you're gonna see how it's gonna go. Yeah, receipt, Apple, whatever. I think Apple be stealing money from me. Like, why am I charged every day? Apple receipt, I'm being charged for something. I mean, no. But yeah, so far that's a lot I can tell you guys. These factors and rules for you guys can screenshot that. You use this as a trading guide. This is just the basic 5 principles behind my trading, but now you need to know how to approach every single scenario. You need to know how to approach every single scenario. Look at a scenario now like this. You're trying to go ahead and buy from here because of a Twizzler bottom. But like I said, after a strong push down, I would like to see new structure created before I buy. As long as I'm like this, I'm still very much bearish. I'm taking sells instead of any buys in this type of market. New structure created just like the way it happened on gold, then I'm targeting these imbalances right here. So all of these type of things, you never want to be in a haste to just buy or sell. I mean, to just buy from here because the market has pushed down. It means you must buy back up. Stop trading like amateurs. That's amateur way of trading. But is there any questions so far again? Before I come to the end of our call for today. Trading books. I personally do not read books. I was listening to a lot of podcasts. I listened to a lot of Mark Douglas, listening to him talk. And there was this other dude, I need to look for his name. I can't think of his name. Those are the people. I didn't read books. I was just listening. So talk a little on risk management. All right, so for risk management, right? What can I really risk management? I just always say that one thing about risk management is people tend to focus on how much they can make and forget about how much they can lose. I used to be that type of trader too, that I'll get on the chart and I'm thinking that okay, if I get into this trade, if I catch 10, 20 pips, I'll make 2K or make $200. But forgetting that if I lose that trade, I also lose 2K or lose $200. You feel me? So the moment you start dealing with that percentage risk returns is the best, because you understand that the more stop loss, the bigger your stop loss is, the smaller your reward. Just like how it is right here, like on this Jolly Rancher. Let's say you're trying to have an entry from here. If you have a stop loss all the way here for 20 pips, right, and you're risking $750, you will make about, it's at $1,496. But the moment your stop loss becomes smaller, you're making more money, right? So some people try to risk more. That's why I risk percentage wise. I don't risk money wise. I risk percentage wise. Because if I choose to, like, say, if I'm risking, you have an account of $1,000 and you're risking $50 every trade, and you lose your first 5 trades, you've lost a lot of money. You've lost if you send $50 every trade, that's 150. Is that 150? I don't even know math no more. 5 times 5, 2. Yeah. So all that stuff, 250. I don't want to say 250. I was thinking like it was like 10 or something. But yeah, it's gonna be 500. My bad. That's why I say small figures are disturbing me in my life. You do that, and if you say that you're gonna be risking $50 every single trade, the moment you lose your first 5 trades, you're down to 50. That is not a good look on that account. Trading, you're having random wins and losses. You never know which one is your next win. You never know which one is your next loss. So you're just literally taking the next trade. You're literally taking the next trade and be like, okay, I'm trading because of my confluence. If it works, that's great. If it doesn't, that's all right still. So choosing that I'm risking 1% of my account on every trade, the moment you risk 1% of $1,000, it's not the same as 1% of $900. It's not the same percentage. So if you're risking 1% today, which is say 750, and it gives you 2200, that's a good return. Tomorrow, you're risking that same 1%, but you have a bigger stop loss, it will give you a different return. It will give you a different return because of your stop loss. It's just how people risk management varies based off how their profitability looks like. Some people that are constantly patient and catching winning trades, they could do the money manage, they could do the risk management based off money wise. But for people that are, their wins are random a lot, preferably they do the risk management percentage wise tactic. Does that make sense? Do you get what I mean by that? Do you guys understand that? So it's all about how profitable you are. How if you say, okay, if I take this first 5 trades, out of these first 5 trades, there's a possibility that I will win 3 or 4 out of these trades. You can do money management. You can do money management by cash. But if you're saying that, okay, I'm this type of a trader, all right, let's say we have trader A and trader B. Trader A, right, takes 5 trades, and trader B takes 5 trades. Trader A knows that if he takes 5 trades, and risks percentage wise to using position lines too. Okay. Trader A knows that if he takes 5 trades, within that 5 trades, he's most likely to win 3 trades to 4 trades. Trader B knows that if he takes 5 trades, he's most likely to win 1 to 2 trades. In the case of someone like Trader B, he is better off using risk management of percentage. He can use risk management of cash, of money wise. So he can choose that on every trade, I'm risking a fixed amount, which is $50 on every trade. And this person can say I'm risking 1% on every trade. It's just about the nature of how you trade. You decide on your risk management. I have accounts that I trade on that account based off, money. Then I have accounts that I do percentage because they're funded. There's just so much you can do on the funded. You need to be really, really careful. But on my own personal account, I could decide that today, let me just put this one because I know that this is my A1 setup, and I'm like confident. But still, I'm over risking more than my usual risks. I'm not saying that I will risk 1,000 on every trade. And this one day this week I'm come and risk 10,000. No. What if I lose that 10,000? I'll lose all the profit that I made on that previous 1,000. So risk management is just like that. So understand and be happy that your lot size is gonna be determined by your stop loss. Your lot size will vary. Some people will use the same lot size every single time. But that's fine because like some people in my signal group, they use the same lot size because every time I give a gold trade out, it's with a 20 pip stop loss. I don't give a gold trade to more than 20 pip or less than 20 pip stop loss. Unless if I see like, okay, the market is moving funny, I could be like, increase your stop loss by 10 pips. At that moment, you as a trader should understand that you should cut some losses and so you reduce your lot size and then you let it keep riding so that you can still maintain the same amount of percentage that you were risking on the trade. So it just be like that. it's all about the nature of how you trade, how your wins are. If your wins are too random, you should do percentage wise. If your wins are not too random, you can do money wise. Percentage wise, understand that your lot size will vary based off how big your stop loss is for that day and all the like. Did that like elaboration and risk management help? I bet. All right, guys. So since we're coming to the end of our call, I want to appreciate you for staying to the end. Wish you all luck on how you're doing. So make sure you're journaling yourself. Make sure you're understanding yourself as a trader. Make sure you're taking down your mistakes and making sure you're doing your best not to repeat those mistakes, because doing the same actions to get you the same result, nothing will change from that. And no, the market is not against you. It's just you against yourself because you keep making the same mistakes, man. Second, you're missing, I have a last problem. All right. Where is this thing? Trade. You can go ahead.
Okay, thanks for unmuting me. I have this question. When I enter, I just wanted to ask that if I enter into a position, right?
Yeah.
And immediately as I enter the position and the market is giving me drawbacks, like just seconds after I enter the trade, market is giving me drawbacks. And let me see, I'm risking, let me just say 5% of my account, or let me just say 3%. If it hits my stop loss, is it that just 3% of my account is lost or more of the account is lost? Can you like
Just
explain?
just 3%. You lose only what you risk. The market won't take more unless it's like news that slippage might happen and take more, but if it's
Okay, what if my stop loss is actually high and I'm risking 3%? Like if my stop loss is long, like it's wide and I'm risking 3%.
so at that point you're not actually risking 3%, because if you're getting into a trade and you've decided that okay, your entry is yeah and your stop loss is yeah, it's showing that this is 3% you're risking on the account. I'm just giving an example. This is not actually 3%, but I'm just saying it shows that this is 3% you're risking on the account. But in actuality, you have not measured your price from stop loss, from entry to stop loss. But you've choose that you're risking 3% just psychologically, but not actually on the screen. You understand that? It seems like that's what you're doing. You've not actually calculated that, okay, if I'm entering this trade from here and my stop loss is 28 pips and I'm choosing that 1% of my account is $50, what lot size should I use? Then you have to do like the whole, I think it's like the lot size divided by the pip count to have it. Sorry, the pip count, I think divided by the money to have your lot size, something like that. I use a risk calculator, so I don't really have to deal with all these maths. Because yeah, if you have to know that you are risking 3% of your account, you need to know the initial balance of your account, which is let's say you have $100 and you want to know what 3% is for the $100, and then you put that 3% in, and you need to know your lot size. You take that money and then you divide it by this 28 pips for your stop loss. But doing all this math is just too much work. Like Miles said, you could use my forex book. My forex book will help you. If you still want to unmute and talk, my forex book will help you out, because it shows that you've chosen that you want to have risk 3% mentally, but on the chart you have not yet done the calculation to risk 3%. You need to do all that
Okay.
calculation.
Yes, because I realized, because why I trade on demo, if I said I want to risk about,
Yeah, wow.
my account balance on demo is 10,000. I trade and then I risk 1.5, 1.50. So when I'm drawback, I realize that my loss, like my drawback, the amount is really high. But in my mind, I thought I risked just about how many percent. So I wanted to be actually clear and to be sure about it.
All right, so it means the lot size you're using in comparison to your stop loss is too big, which is more than that 1%. So yeah, you go to my forex book. You know my forex book, right? You use the position size calculator from there. It will tell you your lot
Okay.
size. It will tell you your lot size to use. Doing this math I'm telling you right now will do too much work for you. Me personally, I use what is called a risk calculator, where I just come on the chart and I click I want to sell. Then some lines will come out and I choose that I want to risk 2% today. I'll just pull the lines here and there and it gives my lot size and I press enter the trade. It does all the math for me. I don't have to do that.
Okay, please, how can I calculate the from break even to stop loss? How many pips? How do they calculate that? And how do I know exactly how to place my stop loss?
This is like a whole session right now. Um, Let me stop this recording. I think I'll just keep it going. So for your entry, right? Let's say you want to get in here. You get in here for the entry because this is where price is currently at. You're looking for your stop loss. Let's go on the 1 hour time frame, and you're choosing your stop loss to be around this area for some reason. I'm not giving any specific reason. I'm just saying you're choosing your stop loss to be around this area. So at this point, your stop loss is 21 pips. So to know how, okay, now 1% of your $10,000 account is what? It's $100, right? So
Yes.
you have 21 pips. You divide $100 by 21. That will give you your lot size.
Okay.
So now you're risking that 1% of that account, and you know your stop loss. And now at this point, you're putting in this figure that is at this point for your stop loss, which is 0.66974. That is your stop loss figure. And then your TP could be
Okay.
any other figure that you choose for it to be.
Hey,
So, but
thank you so much.
you're welcome. For stop losses, the basic principle of stop losses is that you want to get in at this, like for a sell, you're getting in at this high and your stop loss is above the previous high. And the same thing for the buy, you're getting in at the low and your stop loss is below the previous low. So that's why now to advanced traders, you need to start knowing what is called top-down analysis, so you can go on lower time frame and look for the best lower high to put your stop losses for the sell and the best higher low to put your stop losses for the buy. So this is a whole part of trading where it's difficult for most traders to do, to understand where to put their stop losses so they don't get clapped out. Because something that happens to a lot of traders as newbies is that you get clapped out and the trade goes your way, which is not the best. So you see people, you have like a 21 pip stop loss, 10 pip stop loss, and still get clapped out. Me, if I trade AU, there's no way in hell I'm having more than an 8 pip stop loss right now. Because it's not just possible. I already know the pair too much. And that could be you in a couple of months. You just have to stick to a particular couple of pairs, know their nature. But all this I just told you right here is the basic principle of stop losses. And you just have to start going down on lower time frames and identifying how to get those stop losses. Yeah. Yeah, trade Asia. Majority of the time I take my AU trades is doing like 10 at night or 11 at night. That's when I trade AU. I don't like, I let the market around this 8, 7, 9, they do what they have to do. But the real most happen at 10 at night or 11, maybe even 12. Then I keep holding it to London Open. If London doesn't reverse it, I keep holding it to New York Open. Say Nuggets. Yeah, that's pretty much it, guys. Like, there ain't really too much to these things. It's just principles. Know the principles, know when to apply them. Just be patient about all those principles. Like, sometimes the market will do what the market does, but you already know you can't win 100. You lose some and you win some. It's part of the game. The next call is gonna be on Sunday. Hopefully, I'm not too drunk, so because I'm outside. But I'll be good though. I think so. It's at 3 p.m. I'll be good. I'm just playing. So it's Sunday at 3 p.m. EST, which is 8 p.m. West African time. Right now, I'm dedicating this year to just teaching. Next year, I don't think I'll be teaching no more. So I just want to do this, and the people that are with me will go forward. Then I always have my moments. I do like a year of teaching, then I do like 2 years of or a year of not teaching. But I think after this year of not teaching, I don't think I'll come back. All right. Thank you all for staying to the end of this call. This has been our longest call so far. I will see you all on Sunday. You stay blessed. On Sunday, we'll do more analysis for the future market opening up. We'll look at a couple of pairs that you guys trade. I personally, I trade only gold and AU. Sometimes you, if I'm just like trying to play around a little bit. All right. Thank you all. Y'all stay blessed.